jail's not that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
Have you been doing any trades? Have you been looking into like any opportunity, or you think it's kind of flat?
I've been shorting some things time to time. I'm looking things to short today as well. But mostly like the trash coins, like I mentioned, right? Finding trash coins that pump. And I've actually been doing like a lot of like sell put basically. But not today.
I see. Okay.
The yield is pretty good. Like Bybit is giving like yesterday or the day before, if you were to sell put with a strike of 65.5K, it was like 100% APR or 150.
Oh, okay. So you've been doing a lot of those.
3 days.
Then. Yeah.
Yeah, I've been doing that 3 days, and every 3 days I just look at the price and see do I want to do it basically.
You wanna explain the risk? I guess like the risk for the listeners is that like if you write that and then it goes against you, right? And you'll just have to like all the
Buy
premium
it.
that you have already.
Yeah. So like sell put is basically like the strike price is 65K. If it drops to let's say 60K, but that still means that I used the money to buy at 65K. And then what I earn is the premium, which is there's a yield like it was typically like 100 to 200%. And yeah, that's basically it. And my view is that first, I don't mind buying Bitcoin at 65K. Secondly, is that if it does dip to 65K, I feel like with like the volatility recently, we'll have like a bounce to let me exit the Bitcoin I bought if I really wanted to. And then it's no risk, no smart contract risk because it's centralized on Bybit, and then the yield is good enough that I rather do this for like with less capital and do like this 80% to 200 something percent APR than put more
Then to
money
do
for
more,
like fucking
yeah.
5% APR kind of shit. You know what I mean?
Yeah, like my next question I was actually going to ask you about how much would you trust these like trading strategy backed stablecoin? Like there's quite a new one of them, right? Like Axis just launched with $10 million minted and so on. Like a lot of their strategies are typically, if not writing things, statistical arbitrage, sex stacks, and so on. But the yield
in my
formula
opinion,
is like between 10 to 20%. So you're right, it's not as interesting.
so the truth is that I haven't looked into those deeply. It's something that I want to look into. In the end of the day, it's like risk and reward, right? Like all the strategies are the same thing. Like we can probably run the strategies ourselves in some sense. But like, would you want to just stick with Athena for 2-3% stress-free, proven to be okay in a centralized exchange, or do you want to be like, let's take the risk for 10%, right? But in the end of the day, we're just betting on the airdrop. So I think it's more on like, is the airdrop worth it instead of like, do we want to go for the 10%? To be very honest. Is there anyone
Got
that
it.
you like so far?
So I'm still chatting with most of them. I do think that the quality of the transparency has been going up, so like they've been like very good in terms of like, yeah, we are with Copper, we're with Fireblocks, we're with this and that. Here's all the custody, here's the auditor. Like, so it's much less scary from that front. But I do have to admit, it's like some of them are still smoking opium, like, yeah, we would backfill your token at like 250 million MDV. Like, bro, you're not going live at 250 million, man. So it's like, yeah, like that's just like really like I think if more of them are like, we are gonna backfill you at 50 million, it would be much more interesting. But yeah, like nothing super new, man. It's really all that. Oh, one thing that I do find super interesting. I will try to get them on the pod. I don't want to publicly state their name yet because I don't know if they're fully out of stealth. Their website is public, their X is public, but just in case. But let me ask you on this. I've been seeing a couple ideas of like these yield products, like either vaults or stablecoin, that is much more connected to real world business and like exogenous. So like one is doing this e-commerce invoice financing. So like take, let's say like Amazon, right? So they work with, let's say like one of the top 10% biggest sellers, right? And they typically have to wait, right, for like 30 to 60 to 90 days to get the money. So they upfront that money first, and then they take the credit risks. And in return for doing this, they're getting like 24% plus basically. Like the like average rate that I've been asking people is like anywhere from 2.5 to 5%. Like the sellers that have great businesses are willing to do this with 2.5 to 5%, not annually, but like on a monthly
For a
basis.
short
So like
period of
if
time. Yeah.
yeah, so so if you like annualize that, that can be like 30%, right? There's a couple firm apparently that's been very good at curating this. So their job is to find merchants whose buyers are not going to default on them. So their like credit risk is like very low. So they're like curating merchants now. You know, it's like okay, like if you have a shoe factory in Hangzhou and you sell to like Nike, like they're not going to default on you or something like that, right? Like so that's like I find this interesting because I do think this is
How
more
big is the capacity of
sustainable.
these?
Well, the one that I'm seeing is like there's like some smaller ones who like we're still like only like 5 to like 15 million. But I know some people say that like like there's one fund that claims they've been doing this for $3 billion. They've been extending credits 3 billion, and their default rate is only like 0.1%, right? So it's actually very very good. I do think it's partially legal problem. So like let's say if it's maybe in China or in the US where the law is much more stronger and like buyers typically don't default, that might be better, right? But let's say if people to do this in Southeast Asia, like I can tell you, as the lender, you have to know gangster. Because like otherwise they would default on you, right?
This
And then
is
they would
the
just like disappear.
this is the real smart contract, bro. What
Yeah, I
language do
know,
you
right?
speak? Ghetto, bro.
Yeah, because man, like if you're like in the US, right? Like if you're like a buyer, right, and then you use your credit cards names, like they can legally go after you. Your like credit score is gonna go to zero. Like now you cannot run your business anymore. You will be blackballed from like Amazon, blah blah. So there's more rules around it. I'm not too familiar like how it works for like Alibaba or something. Like can you actually go after the buyers if they don't pay and blah blah. But yeah, like it's this is gonna be like the tricky thing. But I'm excited to see more of this. I do think it's although it's boring, it's more of a real use case. Yeah.
Yeah, yeah. I think there's a lot of like mid to big size ish, but not like multi-international companies that does these kind of devs, and then like a lot of like retail, like a lot of my friends are in commercial banking. That relationship manager basically does this kind of stuff, but either in like slightly longer or short term stuff. The hard part is like you have to trust this guy to vet it in that sense,
Yeah.
and then
Yeah.
but like those are, in my opinion, makes sense if a company that we trust issues that and we just lend our stablecoin to it for them to scale their business. But to issue another stablecoin on top of this is like, brother, are you
Yeah.
sure? This is like some like chicken legs already. Don't build your chest any bigger, bro. Like, don't fucking loop that shit up.
Yeah, like I think another stable coin is probably not the best design for this. Like I think it should just be like a vault. Yeah, and then they can just take the money. Like I need to show like the fluent voice of it, but yeah, like with like their native stable coin. Sorry, I mean like yeah, with like the USD stable coin, like we're actually also looking into like what kind of ways because that's also just backed by US T-bill, right? And so like we can like there's potentially a lot of like interesting strategy to do there, but I think you would see more of this with newer chains. If they have their own stables, they have their own like perplex, like how are they going to be able to find these unique yield sources? And yeah, it's just going to be like a BD game.
Yeah, 100%.